Hi everyone, welcome back to the Accounting and Tax Helpdesk, a podcast produced by Alamir CPAs and Associates. My name is Haas, the host for this week. This week I'm diving into the concept of why you are profitable, why you're still broke. Business can be profitable, but can be out of cash. Here's the main reason. Profit is a concept on paper. Cash is a tangible asset in your bank account. It's all about the timing of cash collection. So you might have the tons of sell this month, but you get the cash 2 months after, and but you still need to pay your payroll, make the rent payments, all your fixed costs. So that's the main reason you're gonna be out of cash if you're not managing timely. As I mentioned, cash is all about timing. So if under you need to have a profit in order to collect cash. But again, profit is for the one period, which is cash is going for you're gonna collect the cash 30 or 60 days after the you made that profit. It's all about timings. For example, you might have a 100K this month, but you collect it in 60 days down the road. You are not gonna see it. That's why it's very important. It's about the timing. Again, you need to have the profit to have the cash, but again, profit is the concept on the paper. One of the myths that I seen almost 70% of business owners are they think they're financially healthy because they see the profit, but they are not thinking of their cash. So they are making the decision based on the profit, which is good for a period of time, but they are not seeing the second half of the pie. So you need to look at the financial as a whole package, not just one section. So that's the misconception. People only look at the P&L instead of the whole financial package, and that's the main reason, or one of the main reasons they're going broke. For example, we had the construction company as a client. They were really profitable on the paper, but the one of the issues in the construction industry, usually the general contractor paid the all other vendors within 9 months because they need to collect money from the mostly government entity or any private equity fund, and that takes time. They need to submit pay application, they need to notarize everything. So these are takes time, and it's very known knowledge in the construction industry. However, this client of ours, they spend money lavishly. They paid every single vendor within the 5 minutes of receiving invoice, and every time we told them, you cannot do that. Just pause on payment. The response was, "See my P&L. I'm profitable. I can do whatever I want." Eventually, they had to factor the AR, which is very bad financial move. Which means you sell your AR with with discounts to pay your bills. So we just one mismanagement or misconception of the financial, they are on the verge of bankruptcy. At the end of the day, just remember, a CFO can provide advice. We are not in charge of operation. We give you advice, we give you tools, we give you knowledge. It's up to the business owners to listen to the CFOs. One bad decision, remember, one bad decision can make you broke. So listen to your CFOs. If we are providing advice, consider it. If you are disagreed, have some solid reasoning behind the disagreement, not just my P&L is good, I can do whatever I want. When the sales made, you just need to make sure there is a formula in accounting called cash conversion cycle. I explained this formula in previous episodes. Tune in and check it out. But the goal is to reduce the result of this formula to the minimum. So if you're collecting faster than you're paying your vendor, you are golden. You make money, you pay your vendor. But if you are not paying your vendor, or you are paying your vendor faster than you're collecting, you are increasing your cash conversion cycle, and that's not good at all. So if you have unpaid invoices or unpaid bill, that's affect directly to your cash conversion cycle, and you don't want that. You want to basically collect your invoices, pay your vendors. Another part of this formula is inventory. Inventory is basically cash sitting on your shelf. So you need to make sure you come up with the inventory ordering point, and the CFO can calculate that point of order for you. But if you buy lots of inventory, for example, lots of desks, and put it on your warehouse, if you don't have a customer to sell them, you have a lots of cash convert to the desk on your warehouse, and they are gonna start depreciating and lose the value of their value. So it's another factor or issue that business owner make. They think, okay, I have inventory, so my balance sheet is perfect because my current asset is high, but they don't understand the inventory. It's the cash that turned. You're gonna see the cash within the 3 or 4 months after the sale. So just be careful on that. The other issue business owner have is mismanaging their growth. So, for example, they have a lots of revenue coming in. They have some cash in the bank. They start making bad decision. They take on projects that's bigger than what they can afford because they only look at the P&L. They start purchasing some equipment that they cannot afford, and worst of all, they start distributing the money to the partners or the owners just because in their mind, my P&L is great, I'm fine, I can distribute the cash. That's not the correct approach. You always need to, again, as I mentioned before, you need to look at the financial as a whole. If your P&L is good, you need to make sure the balance sheet is good. You need to make sure the AR aging is good. You need to make sure cash flow statement is good. Then make the decision. To piggyback on my previous points, you need to look at the financial. There are 5 or 6 different metrics you need to see. P&L is must, sure, but it's only one picture. Balance sheet, it's a second piece of financial that tells you what's your worth, how much actual cash you have, how much liability you have. The cash you have, you need to deduct the liability, so you need the actual net cash. The AR aging tells you what's your collection cycle, how long it take, is it 30 days, 15 days, 90 days, 6 months. The AP aging, which means how long it takes you to pay vendors. We want that this number as long as possible legally. The cash flow statement, also projections. So you need to look at this package and understand it before making decision. I do understand these are very technical terms, and you don't want, as a business owner, you don't want to spend half a day to understand it. That's why you need to hire a good fractional CFO to be on your side, analyze the number, and just give you a simple report with the few scenario and decision making. Then you can have a discussion, and within like 45 minutes to 1 hour, you can have an understanding of your financial and then make a decision. As a business owner, you don't want to spend half of your day looking at the boring number that's very complicated for you. And if you have any question, reach out to me. I'm here to help any business owner. Send me an email at helpless@alamircps.com. I'll read them and get back to you. Or if you have a quick question, I can answer it in this podcast. So one of the biggest habits you need to make is you need to look at your cash updates every week. You need to have a cash projection for 13 weeks. If you're in the bad time, you need to look at the cash updates every day and basically make sure it. So if you wait to the end of the month to look at your cash updates and cash situation, the data is moot point. You want those data be live and accurate. You don't want to look at the data from 2 or 3 weeks ago. That's not gonna give you a correct decision for this point of time. So again, CFOs have their we train to have the critical mind, and we train to look at the numbers 24/7, unfortunately. So we can see the numbers, and through the years of experience, a good CFO can look at your numbers, come up with the scenario, and because they are dealing with multiple clients and multiple situations in different period and they have experience, they can give you the advice. Okay, I've seen this situation before. Here is he. I know we can solve it, and here the solution. I had a client did take this advice and they were successful. I have a client that did take this advice and they weren't successful. So we can give you our background, historical information, and apply it to your current financial situation. If you're in a healthy business, you need to look at your cash flow every week, every Monday morning or every Friday morning afternoon. Basically, you want to understand what happened in the last 7 days, what's going to happen next week. If you are in the time of hassle and you don't have a cash in the bank and you're suffering, you need to look at your cash and collection every day. It's might be annoying, but that's the only information that can help you. You need to look at your AR. Okay, every day, this customer hasn't paid me. I need to call them. Why not? And then they're gonna promise you they're gonna pay you today, so you need to call them back again tomorrow. It's the nature of human to delay the tasks, but you just don't want that. You need to look at the cash every day in the time of crunch. If your business is healthy, at least once a week you need to look at your cash updates, maybe for 5 minutes, but you need to understand it. The one piece of advice I tell to all my clients and all the business owner is don't confuse growth with a strength. Profitability is growth, which is great. You need to have this profit to be strong, but the strength and the foundation is all tied to cash. So don't confuse these two. Don't look at my P&L and say, oh, I have money, but never look at your balance sheet. Again, cash is the king. Make sure you look at and treat your cash as a fuel. So if you don't, if you only look at the growth, you'll suffer in a very short time. Again, thank you so much for listening. If this episode hits you home, please share, like, subscribe. We are happy to help. Reach out to us at helpdesk@alamircps.com. My name is Haas, and I'll catch you next week.